There is a softening of jobs, and with the CPI numbers only coming in at 3.2, yes, it's higher than it was last month, but you've got to look into the numbers to see the real changes. These are all good signs that the Feds may be done raising the Fed funds rate. Americans with credit card debt just passed $1 trillion. Now that's with a T. The Fed funds rate going up is causing credit card interest rates to also go up. It feels like a perfect storm. When rates drop and borrowers have all this debt and equity, it will be a great time to be an MLO. Mortgage delinquency has fallen to its lowest level in over 40 years. So let's understand the numbers better. The Consumer Price Index for all urban consumers rose 0.2% in July on a seasonally adjusted basis. The U.S. Bureau of Labor Statistics reported, so yes, the number was slightly higher than the month before. However, once you strip out rent, which is what the Fed has told us they want to focus on because of the lag in rent data, the growth rate of inflation is definitely falling. If we remove shelter, which is about 40% of the total CPI number, it looks much better. What we are doing is we're looking at rents from a year ago where rents today are much less. Look at your communities. Get in your car, drive around. The only construction you see is multifamily. With more of these apartments coming online, shelter costs have lowered. Rents have been dropping since last October. Rents are not the same as when these people originally signed their agreements. NAR, the National Association of Realtors chief economist, Dr. Lawrence Yun wrote, quote, "More jobs were added in the past month, but more recently, the pace has markedly slowed down. The 187,000 net new payroll jobs created in July and the 185,000 created in June are the slowest 2 months of job additions since the start of the COVID lockdown well over 3 years ago," close quote. Again, remember, we need borrowers to have jobs so that when mortgage rates come down, and they will, that they will be able to qualify for refinances that we will be doing, in my opinion, before the end of this year. I am Dave Luna for Mortgage Educators in Compliance, and we'll talk to you again soon.